Hi there, Trace. This is Brad Gilbert with the FX Market Insight for Friday, the 16th of August. All right, now as we come into today's market, it's amazing what a difference a bit of data can make. US retail sales figures came through much stronger than expected and really blows out the old story about the US recession fears. Yeah, sure, historically, based off the yield curve, it comes into play, but this is all fear-mongering. I don't think we'll see much from those punters after those strong US numbers. Now, the equity markets, this is the odd thing. There's a few odd things in play here at the moment. Equity markets, for the media in particular, is all about growth. That's where the global growth will be seen, okay? So equity markets up, yeah, global growth's going great. I mean, how can global growth be great one day and bad the next, and great the next day and bad the next? It doesn't make sense, right? So understand what the media is trying to do. They're trying to sell advertising. So don't get too caught up in the hype. Now, equity markets, all Trump has done since he's been in is try and get the equity markets up. He wants low interest rates. He wants everything. He owns companies, or all his mates do, and his job is like a company CEO, just to get the equity markets up as high as possible. Now, they are extremely high on artificial movement as far as I can see. There's no sort of huge profits across the board here. It's just a low interest rate environment and really spurred on by a lunatic with very loose fiscal policy, right? And that's what Trump is. So those strong US retail sales figures hasn't done much across the board, right? When you look across the major charts here, but let's come over here to the major pairs. Euro is finally, okay, and I say finally, it's starting to move again, okay? And the US retail sales figures really did give it a shot in the arm, and we have seen it sort of drop to the downside. Funnily enough, the rest of the pairs, you wouldn't even know anything came out, okay? Aussie, Kiwi, Sterling, dollar yen, and even dollar CAD for that matter. It's just grinding away here around that previous resistance line. But Euro is the major focus at this point, and it is cruising to the downside. And this is, we've seen this a dozen times over the last 6 months where it looks set to go to 110, and then all of a sudden it's back at 112. The good thing is we had the strong retail sales figures that really started to give it a push down. Now that's and it could be unlucky, right? You could be short Aussie, short Kiwi, or any of the other pairs, and you're thinking, well, what's going on here? I haven't got any joy out of this. But that's because the geopolitical events at the moment impacting various pairs is really screwing things up. All right, so just having a look at those retail sales figures, as I mentioned, these are really, really solid numbers. And whoops, just gone off there. Let's go back to economics. Really gives the global markets a real shot in the arm. If I can just get my mouse up. Okay, so and that's all we're looking for. And funnily enough, it may not always be the biggest number, but it is one that's there. Now, what they have done is it's quite funny how they're quite selective, right? So industrial production numbers, which were weaker, it just gets pushed aside, and they do focus on the big numbers here. Retail sales, obviously, ex-autos up 1%. The retail core number itself, 0.7, and that retail control number, all really strong numbers. So you know what? That gives the dollar a bit more solid footing. The markets haven't run away with it, except for Euro. It doesn't really like what it's doing, and it's just starting to drift lower, which is where it should be. All right, now just coming back to the MyFX Trading Hub, there's been some major updates across about 4 or 5 plugins on WordPress and all the themes and things. So you'll see things a bit out of whack today. The team are working on restoring all the updated links, etc. But the main thing is, with the analysis, there's been no change at all in the analysis. There's a lot of noise around the markets and the media, but you know what? It's just noise. Nothing's changed. Okay, the dollar is still just slowly edging higher. The sterling, Aussie, and Kiwi are still going down long term. On the hourlies, they're just sideways. You can see that very clearly. Euro is starting to poke its head up. What we would like to see is it go down a bit further and we get those daily and weekly trends. And that's where I think we could start to see a really nice trade on Euro to the downside. And actually, the good thing is I've seen a lot of our traders already all over it, which is great to see, and they're locking in some serious coin, which is the way to go. Wait for the good opportunities and go from there. Now, Friday, there's not a hell of a lot of data left. There's the prelim University of Michigan consumer sentiment numbers. It's a good historical number for consumer sentiment. Once again, this is just another piece of the puzzle. It's not like a massive trend move or anything else, but you want to have a look at this. If this comes in like a strong number, well, then you know what? We've got retail sales, consumer sentiment. We've got a couple of big numbers, US numbers lining up, and that should hopefully give the dollar some more specific direction. At the moment, we are still dealing with Trump and these two geopolitical events, which are making sterling and the general movement in the US dollar a little bit unpredictable. Okay, so that's why things are where they are. And other than that, guys, it's there's not a hell of a lot going on. I'd be looking to sell, as I said, euro on rallies. It looks like the best trade for me at the moment, even though it doesn't line up across a lot of other pairs, as in, it doesn't have the weekly and daily sort of setup at the moment, but it's not far off that. And we do have, if you just wind it back, there's nothing really until 110 sort of 35. So to me, it's in the middle of the range, but it is definitely worth looking at getting short on a rally, whether that's back up towards this resistance line around 112.15, or even with that latest movements, you're looking at, just move that across, even back towards 111.40. We should find sellers back at that level. All right, guys, that's it from me. There's not a lot more I can tell you about the markets, except, it's steady as it goes. Euro's the key at the moment. And all those people sort of jumping up and down about a recession, you might want to hold on to your horses there. It doesn't look like it's going to happen just yet. All right, guys, that's it from me. Have a great trade day. Cheerio.